And let me just invite our guests. I've got Thomas Danis, who's an investment partner and fund manager of Internet Ventures at MCI Management SA. Alexander Galitsky, co-founder and managing partner at Alma's Capital. Ilja Laurs, founder and chairman at Netriac Ventures. Roman Simonov, managing director at Singular Guff. And Christian Graggaber, it's Graggaber at least, Chief Digital Officer at Burda Media. Thank you very much for joining me, gentlemen. Okay, now I've given you a basic introduction. What I'd like to start with here is for you just to talk about what you do. I mean, we don't have 3 hours to do this, but if you could briefly just introduce us to yourselves and what your area of focus is. I mean, we know we're talking investments here, but if we can start with you. Yeah, okay. Start with you. You got the mic.
So, Alma's Capital, we are doing investment in companies which trying to get on global market. So, for these purposes, we have office in Moscow and in Silicon Valley, and we are covering this area, which is former Soviet Union and moving to the Eastern Europe.
Yeah.
So, with our companies, so we run a second fund. So, first was very successful. So, second is going pretty well too, and we're very active right now here in Ukraine.
Okay, if I can also ask you guys to speak into the microphones, because I think some people, I could hear some whispers there going, I can't really hear that nicely, so I'll ask you guys to speak into the microphone, please.
Yes, so hi, I'm a founder of Netriac Ventures. So in my past life, last 5 years, I built and sold 2 companies and decided to be on the other side of the entrepreneurship table. And now I'm investing into global early stage startups. Focusing on Lithuanian startups for the moment and looking at Ukraine, Belarus beyond that. And verticals typically more to the mobile side because that's what I understand.
Okay, excellent, thank you.
So what do? We basically invest in the companies. We find good companies, we source deals, we give them the money, we structure the deal, we help them to grow, and we sell them through IPO or through money. So everything in between. It's a lot of work. Easier said than done.
Yeah.
We're part of a large US-based 11 billion money manager. We have 1.5 billion under management in former Soviet Union. I'm responsible for technology, media, telecom, internet, software, practice of this firm.
Hello. In Burda Media, we are transforming actually an old publishing house into a modern technology company. By doing strategic investments globally, so from Thailand to Russia to Brazil. Strategically means that we are taking our own money and not having necessarily an exit strategy. In addition to this, we're also running a series of conferences under the brand DLD, and we have an own VC under the brand of Acton Capital.
Okay, now, when investors look at markets, now I'm no investor, right, but I do read a lot, and I read a lot of Harvard Business Review and all the rest of it, and I'm told that when investors look at these markets, things such as per capita income, growth, inflation, those are some of the things that you look at. But if one looks at this region, for example, and what's been happening in the region, and also the outside perception of what's been happening in this region, let's talk about some of the key risk factors that you have to consider when looking not only at this region, but similar regions moving in.
Sure, since you're asking me, well, the risk factor begins right at the airport.
Exactly.
So even when you're boarding in London, some people think, well, why are you going there?
Yeah.
But I always view any risk as an opportunity because it eliminates some of the competition, right? So luckily those who do understand the market, well, do realize that it's nothing, everything is really good here. It's not like the external perception like that. So my personal point is, once you get the insights, once you understand the market, and you can leverage the opportunities that others simply are afraid of.
Yeah.
So risk does always come with the opportunity. And I think that those unique opportunities that you have in that region are so large and so unique that just not taking advantage of them would be stupid from an investment perspective. It just takes understand them properly.
And I think what obviously, and I think this is important, not the market, but the network that you tap into. I mean, you have to base what you do on a certain amount of intelligence and a certain amount of access as well. You know, in terms of building that network, how do you go about doing that and accessing the right networks in those countries?
Well, again, this event is an awesome example.
Yeah.
You know, I do believe in networking, and I observed networking working really super well in Silicon Valley for the last 2 years, and I was amazed how open are people. Basically, unless you hang around in that community for a couple of years, you can't really realistically, you know, even build a startup or invest or do anything at all.
Yeah.
Because it is the humans who shake hands, right? Regardless of your product, pricing, design, etc., etc. Maybe Steve Jobs will not agree with me, but I think end of the day, it is about human interaction. So networking in events like that, in personal calls, I think it's like 80% of your business success, whatever area, and specific entrepreneurship. So that's why like physically going here. And again, sometimes you hear a lot of opinions like, why go to those conferences? Like, there is nothing new information-wise. Like, you will not learn anything that you cannot research on the internet in 5 minutes. Like, you know, why bother? And I say, well, you know what, guess what? You know, I put aside all the human values, but specifically from business perspective, you know, it is about relationships. So once you're physically there, once you meet people, talk people, that people, wine people, then you can realistically expect to actually be able to do anything here. So I really think it's very valuable.
Okay, I'll just open up to the panel. Anybody else would like to comment, pick up on that?
Sure. So there are all kinds of risks, from country risk to company risk to technology risk to the execution risk, which is, you know, greater here versus the rest of the world. We know how to deal with these risks. We don't invest in the early stage, so we don't take much of technology risk. Country risk, you know, we also know how to deal with them. We are here on the ground. So the largest risk for us is actually illiquidity risk. When you invest in a good company and then you basically cannot sell it, you know, cannot exit. And we're thinking about exit, you know, before we enter. And that's current environment. It's not helping to answer the exit question.
Okay, fascinating.
Yeah, we have a slightly different risk assessment because we are not necessarily focusing on an exit in our core business in Burda Media. So we see ourselves as a strategic long-term player. Actually, Burda was or entered the Russia-Ukraine during the Soviet times in 1986. So we were running a risk at that time. We were afraid of the crisis in '98 and we survived. We were afraid of the crisis in 2008 and we survived. So if we look at especially Russia-Ukraine today, we have gone through this 3 times already. So we are pretty optimistic that we're going to manage it this time as well. What keeps us busy is 2 things. It's the legislation in many countries, and that's not only valid for Russia, Ukraine, but also for Turkey, India, and Thailand. And it's the consumption of our users that, of course, in terms of crisis, tend to go down.
Okay, thank you. I think the mic was just switched on it. There we go. Okay, let me just see.
Okay, it is
there we go. Perfect.
So I would like to say that a risk everywhere is the same today, if you're speaking, since it is crisis going in all emerging markets. Somewhere is bankruptcy going, somewhere war, somewhere economic problems, so somewhere some sickness, if you're speaking about Africa.
Yep.
So it is everywhere some troubles. So from point of view that risk for Eastern Europe and for Ukraine and for any country, it is the same since a tiny country is from point of view of technological usage.
Yes.
And from this point of view, the same risk everywhere to bring company to the global market. So since it is not enough entrepreneur understanding how to do this. So from this point of view, I don't see the big change from this perspective. What is specific about Ukraine, which I told many times a few years ago, it is a special that we started to see more and more deals with this region. For reason is very simple, since Ukraine open for foreign entrepreneurs easily to jump to airplane and to come over here and to spend time with young or not so young entrepreneurs to find out actually problem which can be solved for world market. So, and our deal flow became pretty strong specifically from this country right now.
Yeah. Okay. Now, what do you say? Interesting discussion I had yesterday. Spoke to an investor, not going to mention the name, said to me, well, you know, I've got a couple of $100 million US dollars that I can hand out. But I am worried about investing in the region itself. And if I do invest in a company in that particular region, I'm taking that investment and I'll make sure that it lives offshore. So that, number one, when it comes to corruption, when it comes to the potential of me losing my business and not having any recourse, I would actually be safer doing it over there. What would you say to an investor who says that? Rather take the investment offshore?
I think it very much depends on the strategy of the investor.
Yeah.
Doing an investment offshore certainly makes in many cases sense because it simply reduces some risk that you would have if you do it onshore. We, for several reasons, we tend to do our investments offshore as well, especially looking at countries like Russia, because that's a company strategy that we're pursuing, and we have been successful in doing so over the past years.
Yeah.
So I would say, why not?
Okay, anybody else? Okay,
We do use offshore structure. It's basically you invest in offshore legal entity, which 100% owns local company, where people employed, an operation happens. You may assign to offshore like intellectual property, and you use this structure because later when you sell the company, it's easier for the buyer to buy that company. They understand the financials, but it's still the same risk. You transfer money into offshore, and then you move money from offshore into the local company, right? So why you do that? Not the tax reason, what people think. It's basically local laws about companies and voting and preferred stock and stuff like that. It's not well developed. So basically, you can structure your investment documents on English law, and that's why people do it in offshore, but not because it's less risk. It's not.
Yeah, no, absolutely.
Well, I would like to draw a metaphor. Once you're visiting southern France and trying to rent a Ferrari, they say, we will give you a Ferrari, but you can only drive, this far because we know the roads, we understand the rules, we understand the insurance policy, etc. So you cannot take it to anywhere else. I think it's very similar, and there is such a thing as a country reputation. Without really understanding what is really happening, what is the reality. External investors apparently can only judge on the perception of the country. And unfortunately, that Ukraine today doesn't have a reputation that some other countries have. So I think it is a necessary step intermediately, until the country gains reputation through repeat steps and through repeat proofs that it's really working and there's safe here and there's external laws are really obeyed and there is no corruption, etc. It will take 10 and more years. That's a hard reality. And unless you make the first baby steps in gaining the reputation, it's very difficult to get any business at all. So I think for the time being, the best strategy for the country would be actually supporting those kind of initiatives, because it is like already having the Ferrari, but still driving it somewhere else.
Any other comments on the panel? Now, just in terms of investment thinking, medium to long term, and especially looking at unstable environments, although some of them still tell me where a stable environment is. I'm looking for a totally stable environment in the world somewhere. What are some of the challenges that you think investors themselves face when it comes to investment thinking, the way you move forward medium to long term, especially with how unstable the world is becoming? I know that Fabrice is saying that, if you look at the amount of deaths, etc., there is a reason to be positive. But generally speaking, when it comes to investment thinking, where do you see yourselves evolving into?
Okay, I'll begin. Well, first of all, I think the good news is that the crowd that you have here are probably the most risky of the risky end to the investors. Yeah. We're not like hedge funds or pension funds or anywhere near like that. So we are used to risk. And to me, the probability that the team will fall apart in 6 months is the same as the war will occur in the country, right? So I'm just used to accepting those risks. Again, with any investment, with your beginning, with your core of the philosophy, what's your ratio of risk versus reward you are willing to take? And high risk always comes with high reward. So I think just identifying the winning strategy is basically identifying the verticals that potentially do have like 10, 11, 12 digits on the end side. Yeah. And if you have a at least a way to see that path, then everything else is just the price you pay for that. So that's the nature of our business, and that's how we view that. And say political risks or demographical risks or anything else is just part of the game. So that's at least how I view it.
No other comments?
We said we want to grow globally, strategically, and we said by doing so it makes most sense focusing on emerging countries. So we took some years ago, 2 or 3 years ago back, the decision to start investments in Thailand, Turkey, Russia, Ukraine. If you look at the political situation in the past 2 years in those 4 countries, it has not been easy. We decided to do though to leverage the risk globally. Last year we had difficult times in all 4 of the countries. But we still believe by focusing on different continents, different countries, we think over a long time strategically we can leverage the risk pretty well.
And that you wanna, go for it.
Yeah, I can add to that. Emerging markets now out of favor, obviously, right? You can see the currency devaluation. Why people invest in emerging markets? They should grow faster than mature markets. That compensates for extra risk you take here for the execution. If emerging markets not growing or not growing as fast as it used to be, money will move out of emerging markets. And you see now US market is actually performing very well. Dow it's at all-time high, NASDAQ it's not, but it's also moving up. So we adapt to this environment. We invest in the companies which headquartered in US but have development teams here. And that allows us to play local market while exit and valuations in US. And we just closing deal today, and I was surprised myself actually how high valuation it became, and investors in the valley totally ignored local risk.
Yeah.
It's not priced in at all in the round price, in the round valuations.
Actually, I will say that speaking about emerging markets, it is some kind of wrong idea to speak when we're speaking about high-tech development, and actually, since it has become global. So any company, you can count many companies in Silicon Valley who have engineers from different regions. I'm not speaking only about Ukraine, Russia, Belarus, or something like Romania or some other countries, but also India and others. So companies becoming global if you're speaking about technological startups or technological companies. So they're moving headquarters to the biggest market, where's the biggest market. So by this way, to speak about venture funds in this area, we'll speak about global venture funds. They operate through borders. Some people don't like to live in California, they live in there. Some people would like to work globally. So speaking about domestic market is completely different story. Yeah? So since it depends from size of market, and even today, even speaking about Russia today is tiny market from technological point of view, since it is only 3-5% of all sales, which is coming. 5 it is too much. So 1, 2, 3% of the global sales for companies like Microsoft, Cisco, and others. So from this point of view, you look on the opportunity from global perspective. So it is how you position. When you position in private equity, of course, you develop local markets. But when you in venture fund, possibly some business model deals good for local market, but not more.
Now, we also have people, obviously, in the tech industry here. They need to become more appealing to investors. Now, over and above looking at the environment in which the country or those businesses operate, businesses themselves, from your perspective, can they do more? Probably a rhetorical question. And what can they do to make themselves a little bit more appealing to people such as yourselves? Because everybody thinks they've got a great idea. Everybody would like money. But some people go the extra way. So just advice for businesses out there in this particular market that needs to attract your attention.
Sure. I think that the very beginning point is actually the philosophy of and the idea, what actually you do. So it is absolutely necessary to understand that not every innovative idea is actually capable of building a NASDAQ company. Yeah. So there are a lot of features that are being offered, including this stage. And intuitively, the entrepreneurs think, well, it's a cool, it's an innovative idea. Wouldn't it be cool to do X? But they have to understand that a subset of investable access relative to all possible access is really small. I would say maybe like 2-3%. So unless you start with something appealing that does have, again, from investors' point, it does have to have like 10, 11, 12 digits on the other side. It can be sustainable. It has to be independable. It has to have a path to connect and all the dots, etc. So there are some basic parameters of the idea itself. And too often I see that entrepreneurs are focusing on the presentation. They make awesome pitches, they make shows, they make etc. But again, forgive me for that metaphor, but unless you have a substance, then the way you present, the way you position yourself, the way you try to pitch investors no longer matters. So I would really spend 90% focusing on the core ideas. And once it's there, then the luxury can have is actually not being shiny, attractive, etc. Because, well, we're at least we think of ourselves as smart guys who can see beyond the pitch, right? So it would be probably too naive to think that 30 seconds of awesome show can make my decision to invest $8 million just based on like this little show. That would be a little bit, I don't know, too thinking too low of me, right? So unless you do have a substance, which is very difficult to get right, but again, it's not rocket science, it is possible, then I would invest all of my time as an entrepreneur, as a startup there. And then again, the way I present, it doesn't really matter much.
It's the same criteria. It doesn't matter whether you invest in emerging markets or in mature markets. Investor, when they listen to the presentation, they're trying to answer one question: why this investment is good and makes sense. It's one motherhood question, which requires to answer 300 other questions to answer that the one, right? And obviously, you break this question into several parts and try to solve, one by one. And we usually break on 4 parts. Is it the right sector? Is it the right company? Are these right people? And is it a good deal?
Yeah.
Right? And we're trying to solve one by one. And in the boom times, maybe we did investments when we have like 2.5 out of 4. But now we're very disciplined, and if we don't have 3, we don't even touch it.
Okay, makes sense.
If I had a company or a startup in emerging countries today, I would not very much think of an exit. And when I start the company, I would not think of an exit. I would think about building a company that has content that is based on form over substance over form, actually.
Yeah.
I think that's the most important thing, because investors are getting smarter as well, and they are not only running after the next hype, but looking at what is actually in the company itself. I think that's one thing. The other thing is, if I had a company in emerging countries, I would only build companies that have an international perspective. And I probably would create something that has a USP that is not only valid for the country where you're doing the business, but also for other countries. And then I would go international as soon as possible to bring it out of the country.
Okay.
I will say that it depends from stage. It depends on the seed investment, it is A or B. But Roman told about 4 criteria. You can speak about that each startup costs $4 million immediately when they open door, but after the C minus is millions dollars.
Yeah.
For each of criteria which he told. But when we invest, we always on stage, for example, A and B, we understand that mostly our job, speaking about investors, will be HR. I was surprised. I was an entrepreneur. I built companies, but I found that VC more spend time, smart VC spend more time for HR job. Mm-hmm. Especially when they would like to move company to their second level. And the second one is business development job.
Yeah.
So it is where mostly our efforts are going. So we are not building strategy for companies, since we discuss strategy, but execution of the strategy is done by management. From this point of view, you pick up startup actually from point of view of how big market and how good team, initial team. So how honest team, how team is open for changing, how team is open for understanding their mistakes and everything. So you pick up team, and you pick up actually big market, since you anyway make pivots during your long life in 5-10 years of development of the company. Even in 3 years, you're making pivots. So from this point of view, it is a criteria.
What I think, just to wrap up, because I think what we're going to do is just keep the pace going with this. But the lessons learned. I mean, that's the one thing that's for sure. I mean, we burn our fingers, we move on, we evolve. If one talks about unstable markets, generally speaking, what are some of the key lessons that you've learned and that you can share with other people moving forward?
Well, it really pays off to understand all the local risks in those kind of markets because we are unapparent. It's just very difficult to explain to a blind person what red color is because you don't know what you don't know, what you've never seen. You cannot even think in those categories. But reality shows once you move into unstable markets, the dangers, the risks are come from the areas that you're like totally unaware of. So you check for rain and it appears it's actually a volcano sign. Right? That's typical, at least my experience in, say, unfamiliar markets. So definitely networking and learning what are the local risks makes a lot of sense because that at least gives you the sense, what's possible in this country, in this place.
Excellent.
My learning was in unstable environment. Actually, environments, come and go. Right? It comes in cycles. But you pay more attention to the people. If it's a serial entrepreneur, person knows what he's doing, not learning on the job, it's not easy to replace founder or CEO. You don't want to do that, especially in these markets. So we pay more attention to the people, and sometimes we can even overpay and usually don't do the deal, but if people are good, we do the deal. So that becomes like swing factor. That's what Sasha said. HR becomes more important.
You mean entrepreneurs who think they know what they're doing most of the time? Because I think a lot of us sort of make it up as we go along. I mean, as I'm sure it is with investment as well. I mean, you learn and you evolve. I know many entrepreneurs, for example, who, yes, they understand the core of what the business is about, but they keep learning. They keep learning and they keep evolving.
Yeah, problem is the learning on your money. There is like good phrase, right?
Yeah.
You would like them to shave on somebody else's face first.
Yeah.
Right? if they did it before, then it's you can trust your money to them.
Absolutely.
Well, I completely agree on the people factor. I think it's all about finding the right talents in the country. It's also about understanding the country you invest into. Every country is different, and you have to understand the needs in the country and the people and the culture. There is no one-size-fits-all strategy globally. And I think when it's about investing in emerging countries, or currently in the region, Russia, Ukraine, and in these countries, if you have an investment strategy that looks after the next 3 years, and you want as a VC, you want to do your exit within 3 years, I'm not sure if it's the right place because the risk is getting too high. If you want to sustainably long-term stay in the region, then I think it's always going to be interesting.
Okay, thank you very much.
First of all, message to entrepreneurs that I believe strongly from my entrepreneurial experience and from my investment experience that 70% of advice which you're getting from investors are wrong. So it is a main point. So follow your personal idea. So the second one I will say is that what lessons is learned that first of all we balance portfolio. We take in risky deals and less risky deals since we would like to show good results. And we learned this, it is especially you need to do this over here. So lessons, you never drop deal, since in Silicon Valley people honestly drop in many deals. So they more focus on next Google. We don't have this luxury since most of our deals are starting from niche deals, and you need to spread this niche on the market. So you need to work hard with team. And possibly last importance that you need to clean company. So we have experience when you bring in the, as I told, management team, and when the company is not clean enough, since it is when company bootstraps, they use different methods to develop their companies, their accountancy and everything. Yep. So before you bring in some people, you need to clean company pretty nicely for Western world. So that's what you need to do.
Sage advice.
Pardon me?
No, that's fine. I thought you had something else to add there.
No, it's, I just laughed when my colleague said that 70% of advice is wrong, so I thought myself, well, crediting ourselves 30% is still a pretty good thing. No, but really, in reality, I had one unforgettable experience, one phrase that I really remember for long. I was lucky to work with a venture capital fund, Excel, and one partner there said, hey, the moment entrepreneur that I'm arguing with starts accepting my points, that moment, I no longer respect that entrepreneur, because if me, the investor, who spends 5 minutes preparing for the board meeting, knows better something than he who supposedly lives with the question, and if he takes my point based on my 5 minutes of general knowledge, then something is wrong with that entrepreneur. He should always has his own strong point, different and much better than me. So that's why I actually agreed to the 70%, but thought, hey, 30% is still not bad.
You'll take the 30%. Nothing wrong with that. Gentlemen, I want to thank you very much. I think it was quite insightful, and thank you very much for all your time this morning.
Thank you very much.